Hey, good morning, everybody, and welcome this wonderful Tuesday morning. It is March 21st here at MarketStream.live to On the Open, taking a look at all the European markets and the implications for today. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. First, before we get started, I wanted to address an email that I received, and they said, Joe, you know what, you have all these model portfolios that you discuss. Can you explain how all of these different foreign stocks and how a model portfolio might look? And this is just an example, but this is an international model portfolio that I put together that takes ETFs that track China, Japan, Hong Kong, Germany, France, Italy, the UK, and so on. And basically, we just put a general composition of these ETFs that track these different foreign indices and stocks. It gives you a risk number. This risk number tells me that this is a very aggressive portfolio. When I look at the probability of potential risk, profit or loss, this gives me a 95% probability over in the next 6 months that this portfolio that I put together, right, with these different ETFs that track these different foreign markets, this is what the risk and reward looks like with a 95% probability. Now, the probability of it being down 22%, this portfolio, is only about 5%, and it's also only 5% for the probability of it making 34%. The potential annual return, 12.5%. Annual dividend, 2.56%. Expense ratio, 0.56%. Risk-reward heat map. This tells you where you have the most risk as well as reward. So it gives you a really diversified, planned out risk-reward, and it will take a look at a stress test. In other words, the 2013 bull market. How did this portfolio perform versus the S&P 500? 38%, 32%. What happens if we have a crash again, right? How would it, at the crash, how would this perform? Down 45%. The market was down 38%. So you can see that this is much more sensitive to downside movements, especially in the U.S. markets. What happens if it would happen again? This particular portfolio would be down 64% and 53%. And what happens if we have a spike in interest rates? Specifically up 134 basis points. You see how an aggregate bond portfolio with a lower risk number, right? Bond portfolios, less risk, right, but lower return. If bonds were to go up in interest rates and spike 134 basis points or 1.34%, that bond portfolio would be down 5.5%, right? Because bond prices would be coming down pretty fast with an interest rate move like that. But this foreign portfolio would be up 4.2%. Okay? So there's a lot going on here. I just wanted to show you this just so that you understand how we structure portfolios, how we look at risk, and we make sure that this number, as it fits into your holistic portfolio, fits your risk tolerance, your objectives, your goals. And as always, just go to MarketStream, go to Premium Content, and you can actually fill out in 5 minutes one of these reports, and I'll send you a model portfolio free of charge. Now let's take a look at why we're here, which is taking a look at the markets. And we're going to start off with the UK. The FTSE right now is trading down about 18. It's 7,411 and 30 cents, 10 cents. It's trading on its lows. What's notable here is two things. One is they had CPI data, that Consumer Price Inflation Index. It came in red hot, up 0.7%, and it's up 2.3% year over year. That immediately put the market on notice. What also has put the market on notice is the movement in the pound. The pound bounced this morning on that CPI data, and you can see right now the British pound is up 1 point or a little over 0.8% at 124.60. Everyone's been talking about how these currencies with the strength of the dollar could be coming down into parity. Well, this CPI data, plus now that we have a definitive date for triggering Article 50, you're seeing that the pound is moving to the upside, and as a matter of fact, challenged its 20, went through. Challenged its 50 over the last two sessions. Now with this gap up and in a tight range, but up a point, you see that the British pound strength, it's going through the roof right now. That's putting some pressure on the UK stock market. We're going to see if that continues. You're also seeing that the euro is starting to gain some strength as well against the U.S. dollar. You're looking at the euro-U.S. dollar pair up at 107.99. You can see it's trading off of its best levels. We're starting to see that the dollar is starting to weaken a little bit, and global currencies are starting to pop to the upside. We also saw that overnight in Japan. That put pressure on the Japanese markets. The Japanese yen subsequently had pulled back by the end of the session off of its best levels. Now taking a look at the French CAC. The CAC is trading up about 0.5%. It's up 26.80 at 5,038.90. You can see that it's trading off of its best levels, well above its 50 and 20-day moving average. What's notable here is that they had their first debate last night, and the candidate that really shone was Macron. Basically, he polled out as the most convincing candidate so far. There are going to be multiple debates before they have the first vote on April 23rd. What was notable from that debate was the fact that he was the most hawkish, or basically the biggest proponent of increasing the French military. Very interesting there. Le Pen still is in the mix, and she is that part of that nationalist party. Taking a look at Germany, the most notable headline right now out of Germany is, other than the fact that the DAX is up 22, or up about almost 0.2%, 0.18% at 12,075.20. What's notable here is we continue to see that Deutsche Bank is in the headlines. Now they're down about 7.5% this morning. I'm actually going to see what DB is doing pre-market right now. Deutsche Bank had a headline. You're seeing pre-market, it's down 4.79% right now, after being down 3.2% yesterday. The reason why is that there is a headline that came out that regulators are here in the U.S. are looking at some improprieties or actions against the Deutsche Bank in what they did in the currency markets. Again, this is the details right now are coming together, but again, Deutsche Bank under pressure for another regulatory black mark potentially for the bank. We'll see how that plays out for the rest of the day. Have not seen any of its peers like Commerzbank under pressure. Basically flatline on this news, but we'll watch that very closely. Also, what's notable out of Germany, you've seen that the automakers are firming up. The likes of Volkswagen, BMW, and Daimler are all holding up and actually leading currently right now in Germany. All right, folks, that is it for MarketStream.live. I will be back at 9:30 Eastern Time to talk about all of the action that's happening in the U.S. markets. We'll see you then.